Right, another day of the short on the S&P 500 trade. And what we're looking at, I've got the S&P, the GSPC, which is the underlying, right? And I wanted to talk about how the market releases information and how you use that to modify your trading plan as you go along. So let's recap the trade and what the thought was and why the trade was made. The trade was made primarily based on a retest regenerate. That retest regenerate, of course, is using the high of this low bar's high and its low. That's the generate zone, the regenerate. It's bearish. In other words, we broke lower. We'll come back to it now. You would expect it to try to regenerate right to the downside. So that's what the whole thing talks about. When we started this trade, we started it on this bar and the very next bar. That was where we put the shorts on. Wait, trades down, gets underneath it. Now it tries to trade back into that zone, but so far it's failed to get into it. What do we know at this point? At this point, we know something more than we knew when we first started this trade. When we first started the trade, you know, every trade you have to have what time you're trying to do it, how long you're going to, trade. Is it a daily? Is it intraday? Is it weekly? What are you trying to trade off of? In this case, we were trading off the daily. We were doing a swing trade based on a daily chart. Our expectation on the profit was that it would get back to the swing point high, and we could probably try to take profits in that area somewhere. Our expectation on the loss would be a trade back over this area. And so as it traded into here and we took the two entries, right, the idea was that we stop out up here and that we try to take profits down here somewhere. Now, fast forward to today. Let's continue the thought. We have additional information released at this point on this chart. So the previous stop was just above this top of that swing point low. So the stop had to be up into this area somewhere. But now you have a high volume bar with a top right there. And so we have some additional information that we can use. We don't have to wait for the stop up here. We can actually use this bar now as our stop out trigger, right? Because if we get above that, we're probably going to go to the top and maybe farther. So knowing that, we can look at that price point, it's 2009 versus that high that we were using before, which was 2023. So 14 points lower. So now my mind has changed to say, okay, this is probably going to tell us if we're going to trade higher or not. If we get over this, stay over this, we're probably going to the top, we should probably stop out. So we can stop out at a lot less of a loss and still give the trade the potential to succeed, right? And come back down and reach our target and risk less on the trade. And so as a trade evolves, you try to use the information the market gives you to make that sort of decision process. And in this case, there's a good decision process that we can use. The other part of it that we talked about yesterday was this bar here. You know, to get back to here, it has to get back into this bar. And as it gets back into this bar, then it will probably make it to that one. Well, it traded right to it. Volume was slightly lower than that bar itself. So it's slightly lower. And price went into it, back over it. That leads to a little bounce today. And that's where we're at this particular point in time. We're just going to see if it tries to roll back over and get back into the bar. If it does, I think we have a chance to get into this area. And now we can use this as our stop out, conditional stop out area. Just wanted to update you and also show you how as the trade evolves, you too should involve your trading plan to your advantage, right? Given the information that's been released. You don't just stick with what you knew, you stick with what you knew and whatever's been added as time progresses. As far as the utility trade, the XLU still doing okay, made new highs. Really nothing happening there today. Let me pop it up. I think we just got over the highs today. Now we may get a little reversal today, so we'll have to be watching it. But again, the thing that this should do now is trade back into this bar, and using that same ideal of what do we know now, right? We know more things now. We know now that this thing should not trade probably underneath this bullish retest regen zone. So we can use this now as our stop out area, which happens to be a good price point in terms of in terms of our profit. Let me see what the number is on that. It's 47.01. So somewhere around 46.80 or something. And remember, our buys on this, one of them was down here and the other one was there. So we have good profit in it. We'll put our stops in here mentally. We'll see if it trades back in there, and if it does, we'll take some profits there, or maybe take all of it. Depends on what it does. So good position here. Now we want to protect our profits and let it run as far as it will. Over on the other one, we want to protect ourselves from losses and then again give it a chance to succeed. And that's today's update. Thanks.